Hey everyone, and welcome back to US Move and Money. If you're a green card holder watching this right now, I need you to pause whatever you're doing and focus very carefully, because what I'm about to explain could either save you thousands of dollars or cost you thousands if you overlook it. You know, I was speaking with Maria last week. She has been a green card holder for nearly 8 years now, works diligently, saves consistently, does everything properly, and she called me almost crying because she had just learned about a new tax rule arriving in 2026 that she had zero awareness of. She believed she was handling everything correctly. But this single change, it is going to impact her savings far more than she ever expected. And here's the reality. Maria is not the only one. There are millions of green card holders across this country right now who have absolutely no idea that the regulations are shifting. They are living their normal routines, working, saving, planning for the future, and they have no idea that 2026 is introducing a tax rule that could completely change how their finances are handled by the IRS. So today, I'm going to explain everything you need to understand about this new 2026 tax rule, why it matters specifically to you as a green card holder, and most importantly, what you need to do right now, not later, not next year, but right now to safeguard your hard-earned savings. Let's get into it. So, let me begin by saying this. I understand taxes are not the most interesting subject out there. Trust me, I understand. But when it comes to your financial stability, your ability to support your family, your retirement goals, your children's education savings, this matters more than almost anything else. And the truth is that as a green card holder, you are in a unique situation when it comes to tax responsibilities in the United States. You are not yet a citizen, but you are also not a temporary visitor. You are somewhere in between. And that middle position comes with its own rules that many people simply do not understand. Now, before we go into the details of what is changing in 2026, I want to make sure we all clearly understand something very important. When you became a lawful permanent resident of the United States, when you received that green card, you also became what the IRS refers to as a resident alien for tax purposes. And what that means is that you are taxed on your global income just like a U.S. citizen would be. It does not matter if you earn money in your home country. If you have a bank account in Brazil or India or the Philippines or anywhere else in the world, if you are a green card holder living in the United States, the IRS expects full disclosure of all of it. Many people do not realize this at first. They think, well, I earned that money back home before I even moved to America, or I have a savings account that my parents opened for me when I was a child in another country. Surely that does not count. But it does. It absolutely does. And this is where people run into problems because the IRS does not care whether you were aware of the rule or not. Not knowing is not a valid excuse when it comes to tax compliance. So, what is changing in 2026? Well, the Treasury Department and the IRS have been developing updated regulations that increase enforcement of something known as FATCA. That is the Foreign Account Tax Compliance Act. Now, FATCA has existed since 2010, but enforcement has been inconsistent and many foreign banks were not fully cooperating the way the U.S. government expected. But beginning in 2026, there will be much stricter reporting requirements, heavier penalties for noncompliance, and a far more aggressive approach to tracking foreign assets held by U.S. tax residents, which includes you as a green card holder. Here is what this means in practical terms. If you have a foreign bank account with more than $10,000 in it at any time during the year, you are required to file what is called an FBAR, a foreign bank account report. This is not new, but what is new is how strictly it will be enforced. The penalties for failing to file an FBAR can be extremely severe. We are talking about fines of up to $10,000 per violation for non-willful mistakes. And if the IRS decides that you willfully failed to report your foreign accounts, the penalty can rise to the greater of $100,000 or 50% of the account balance. Let that sink in for a moment. Half of everything you have in that account gone instantly. But it is not only bank accounts. The new regulations are also targeting foreign investments, foreign retirement accounts, foreign real estate holdings, and even certain types of foreign trusts or business interests. If you own property in your home country, if you have a pension plan from a previous employer overseas, if your family back home created any kind of investment account with you listed as a beneficiary or co-owner, all of that must be reported. And starting in 2026, The tools for the IRS to discover these assets are becoming far more advanced. You see, under the strengthened FATCA regulations, foreign financial institutions will be required to report much more detailed information about their U.S. account holders directly to the IRS. And if these institutions do not comply, they face their own penalties and could even lose access to the U.S. financial system. So these banks, these investment firms, these institutions around the world, they are strongly motivated to comply. Which means if you have assets abroad and you have not been reporting them, the chances of being discovered just increase significantly. Now I know what some of you might be thinking. You might be saying, well, I plan to move back to my home country eventually anyway, or I am not planning to stay in the United States permanently, so maybe this does not apply to me. But here is the reality. As long as you hold that green card, you are subject to these rules. It does not matter what your future plans are. It does not matter if you spend most of your time outside the United States. If you are a lawful permanent resident, if that green card is active, you have these tax responsibilities. And this is actually where many people get into serious trouble. There are green card holders who moved back to their home countries years ago who have not lived in the United States for a decade or more, but they never officially gave up their green card status. They simply left and assumed that was the end of it. But legally, they are still green card holders, which means they are still required to file U.S. tax returns every single year and report all of their worldwide income. And when the IRS eventually catches up with them, which is happening more frequently now with international information sharing agreements, they are hit with years of back taxes, penalties, and interest. It can be financially devastating. So what do you need to do? First and most importantly, you need to get organized. You need to sit down and create a complete list of every financial account you have outside the United States. Every bank account, every investment account, every retirement or pension plan, every piece of property, every business interest, everything. And I mean everything. Do not leave anything out because you think it is too small or unimportant. The IRS wants to know about all of it. Once you have that list, you need to determine whether you have been properly reporting these assets on your tax returns. Have you been filing FBARs every year when required? Have you been including your foreign income on your Form 1040? Have you been filing Form 8938 if your foreign assets exceed the reporting threshold? Many people have no idea what I am even referring to right now. And if that is you, that is fine, but it means you need to seek professional help immediately. And I want to be very clear about something here. I am not trying to scare you unnecessarily, but I am trying to give you a reality check if you need one. The consequences of not complying with these reporting requirements are serious, and they are becoming more serious. But here is the positive side. If you come forward voluntarily and fix any past mistakes before the IRS finds them on its own, you have options. There are programs specifically designed to help people who made honest mistakes return to compliance without facing the harshest penalties. The IRS offers something called the Streamlined Filing Compliance Procedures, which is designed for taxpayers whose failure to report foreign income and assets was non-willful, meaning you were not trying to hide anything or evade taxes. You simply did not know or made an error. Through this program, you can file amended returns, pay any taxes owed along with interest, and potentially avoid the severe penalties that would otherwise apply. But you must come forward before they come to you. Once the IRS begins an investigation or contacts you about unreported foreign assets, it is too late to use these programs. Now, let's discuss some specific situations that I see frequently because I want to make sure this really connects with you. Let's say you came to the United States 5 years ago. You obtained your green card. You have been working hard building a life here, but back in your home country, you still have a bank account that you have had since you were a teenager. Your parents still deposit money into it occasionally as gifts. Maybe there is $15,000 or $20,000 in there. You have not thought much about it because you do not use it regularly and all your daily finances are here in the U.S. Under current law, you should have been reporting that account every single year on your FBAR. And depending on the balance and whether you received any interest or your parents' gifts exceeded certain thresholds, you might have had additional reporting requirements as well. If you have not been doing this, you are out of compliance right now. And with the 2026 changes, the chances of this being detected increase significantly. What you need to do is consult with a tax professional who specializes in international tax matters. Determine exactly what your obligations have been and bring yourself into compliance as soon as possible. Or consider another common scenario. You inherited property from a relative in your home country. Maybe it is the family home. Maybe it is a small piece of land. Maybe it is an apartment that is being rented out. You are one of several heirs, so you own a portion of this property. You might think, well, I am not managing it. I am not receiving much income from it, if any, so it is not a big deal. But the IRS views it differently. That is a foreign asset that must be reported. Any rental income must be reported. Any gain when the property is eventually sold must be reported. And if you are not doing these things, you are creating future problems. I also want to speak directly to those of you who are supporting family members back home, because this is extremely common among green card holders, and there are tax implications you need to understand. If you are sending money to your parents or siblings or other relatives, that is generally not an issue from a tax standpoint. You are allowed to support your family. But if you are sending large amounts, if those relatives are depositing that money into accounts that include your name, if there are joint accounts or shared assets, that can create reporting obligations you may not realize. And here is something that surprises many people. If you are a green card holder and you receive a gift from a foreign person, whether that is a family member or anyone else, and that gift exceeds $100,000, you must report it to the IRS on Form 3520. You do not have to pay tax on it. Gifts are generally not taxable income in the United States, but you must report it. And if you do not, the penalty is 5% of the gift amount per month, up to a maximum of 25%. So, if your parents gave you $150,000 to help you purchase a home and you did not know you needed to report it, you could face penalties exceeding $37,000. The 2026 changes will also affect how the IRS monitors currency activity and large fund transfers. There will be improved systems for tracking international wire transfers, and financial institutions will be required to report more details about their customers' cross-border transactions. This means if you are frequently moving money between countries, even if it is your own money moving between your own accounts, it creates a data trail that the IRS can observe. None of this means you are doing anything wrong. You are fully allowed to move your own funds. But it does mean you must ensure everything is reported correctly. Let me also address something I hear often. People who say, well, I already pay taxes in my home country on this income or these assets, so why should I pay taxes again in the United States? That is a valid question. The good news is that the U.S. has foreign tax credit provisions that allow you to offset taxes you paid to another country against your U.S. tax liability. So, in many cases, you will not actually pay double tax on the same income. But, and this is important, that does not mean you do not have to report it. You still must inform the IRS about the income, claim the foreign tax credit, and file all required forms. You cannot simply skip reporting because you already paid tax elsewhere. Here is the bottom line, and I want you to take this seriously. Being a green card holder is a major privilege and opportunity. It allows you to live and work in the United States to build a life, to pursue your goals. But it also comes with responsibilities. And one of the biggest responsibilities is tax compliance. The rules can be complex, especially when you have financial connections to more than one country. But complexity is not an excuse. You must understand your obligations and meet them. With these 2026 changes approaching, now is the time to get everything in order. Do not wait until you receive a letter from the IRS, because by then it will be far more difficult and far more expensive to fix. If you have not been properly reporting your foreign assets and income, if you are unsure whether you have been doing things correctly, if anything I have discussed today has made you concerned or uncertain, you need to act now. Consult with a qualified tax professional, ideally one who specializes in expatriate and international tax matters. Yes, it may cost you some money up front to get professional guidance, but it will be far less than what you could pay in penalties if you remain non-compliant. And look, I understand this is a lot of information and it can feel overwhelming. You came to the United States to build a better life, not to become a tax expert, but knowledge is power. And now that you are aware of these changes coming in 2026, now that you understand how serious the reporting requirements are and how strictly they will be enforced, you can take the steps needed to protect yourself and your family. Call to action and close. If you found this video useful, please do me a favor. Hit that like button and subscribe USA Move Guide, because we are consistently bringing you the latest updates on immigration policies, tax changes, and everything else that impacts your life as a green card holder or someone pursuing permanent residency in the United States. Turn on the notification bell so you never miss an update that could affect your financial stability or immigration status. And here is what I want you to do immediately after finishing this video. Leave a comment below telling me, did you know about these reporting requirements? Have you been filing FBRs? Do you have questions about your specific situation? I read every comment, and while I cannot provide personal tax advice in the comments, your questions help me understand what topics to cover in future videos. If you need help right now and cannot wait, I have included resources in the description below, including links to find qualified international tax professionals and details about the IRS streamlined filing compliance procedures I mentioned. Do not delay this. Your financial future is too important. Thank you for watching, and remember, staying informed and staying compliant is how you protect everything you have worked so hard to build. I will see you in the next update.